Hi guys, welcome to my YouTube channel. So before we get started, make sure to hit the like button. Also subscribe to my channel. Today we will talk about investing in stocks for beginners. So make sure to watch the full video. Investing in the stock market can be intimidating for anyone, even seasoned professionals. However, stocks for beginners can seem like an uphill battle at times. Differentiating between businesses, determining valuations, and reducing risk are just a few of the tasks traders will be confronted with. New investors will be forced to tap into several skills to invest with at least some degree of success. Nonetheless, there's only one tenet new investors need to familiarize themselves with at first. Even the most prolific investors of our time were once novices. While stocks traded on Wall Street have become synonymous with multi-million-dollar conglomerates and successful business people, they are no less accessible to new investors with a little disposable income, patience, and a mind for due diligence. There is absolutely no reason new investors can't benefit from a bull market like traders who have been building positions in companies for years. Remember, nobody starts investing in the stock market as a veteran. Developing the slightest working knowledge of how stocks are traded requires time and effort, but it's never too late to get started. Here's an introduction to investing in stocks for beginners, and hopefully, the catalyst many people have been waiting for to start investing themselves. Real estate to stock market. What is a stock investment? A stock investment is the purchase of a public company's shares with the intent of capitalizing on growth and dividend income. However, to understand exactly what a stock investment is, investors must first familiarize themselves with what a share is. Shares are the direct result of when a company decides to go public, otherwise known as an initial public offering, IPO. Going public is exactly what you would assume. The business in question transitions from a privately owned enterprise to a publicly owned business. In doing so, the company will divide itself up into a predetermined number of shares, each representing a piece of the company, and sell them to the public, stock traders. How do stocks make money? Stocks make money for investors when they do at least one of two things. They either grow in value or offer a dividend. When the value of a business increases, each of its shares will increase in proportion to the business it represents. The more valuable the company is, the more valuable each of its shares is. Investors buy shares with the intention of the company increasing in value. When the share price increases from the initial purchase price, investors will profit from the difference at the time of the sale. In addition to growing in value, some stocks reward their shareholders with dividends. As a subsequent income source for investors, dividend payments are distributed to investors who own shares of the stock. Dividends are typically paid out monthly, quarterly, biannually, or yearly, and represent a small percentage of the stock's value. In return for paying dividends to shareholders, companies are granted certain tax benefits. Common and preferred stocks. Stocks may be broken down into two categories, common and preferred stocks. Both common stocks and preferred stocks represent a piece of ownership in a company, and both are investment vehicles that allow investors to profit from the business's success. The former, common stocks, however, is the most well-known and gives shareholders voting rights in return for buying a piece of the business. Preferred stocks, on the other hand, do not offer the same voting rights as their common counterparts. There are other slight differences between common and preferred stocks, but for the sake of investing in stocks for beginners, it's important to note that one gives shareholders a voice and the other doesn't. How to start buying stocks in 5 steps. The stock market offers the lowest barrier of entry to almost any investment vehicle. Whereas other investments correspond with exorbitant amounts of money or are reserved for only the most experienced of investors, investing in stocks for beginners can be broken down into 5 simple steps. 1. Define your goals as a stock investor. Before investing a single penny, and even before opening a brokerage account, aspiring investors must first determine their own goals. Definitive goals may simultaneously give investors direction and set the bar for what they deem to be a success. Without a goal in place, investors will have nothing to compare their progress to, making improving all the more difficult. Additionally, specific goals will help investors determine their own investing approach, of which there are many. 2. Open an investment account. Once investors are fully aware of their intentions and how long they want to invest, they will need to open an investment account. Otherwise known as a brokerage account, investment accounts are the platforms that grant traders access to the stock market. Not all brokerages are created equal, so aspiring investors will want to research each option before settling on one. 3. Learn about stock mutual funds and individual stocks. There are several types of stocks investors may choose to invest in. Each of the companies listed on today's major indices, in fact, represents an individual stock that may be purchased. That said, investors don't have to invest in a single stock with each trade. Those intent on diversifying their portfolios and taking a more passive approach to investing may choose to invest in a mutual fund. Individual stocks aren't better or worse than mutual funds, but rather different. Each one awards investors with its own unique pros and cons. 4. Set your stock investment budget. Investing in stocks for beginners comes with an inherent risk. There isn't a single investment vehicle, for that matter, which isn't associated with at least some degree of risk. New investors can't simply put all of their money in the stock market, which leaves many new investors asking themselves the same question: how much should I invest in stocks for the first time? It is of the utmost importance new investors only invest with disposable income. Do not allocate capital that is necessary for everyday life into a brokerage account. Make sure you are only investing money you won't need anytime soon. 5. Focus on long-term growth. There are many strategies investors can use to invest in the stock market. Day traders, for example, buy and sell stocks based on volatility. They may buy and sell the same stock multiple times in a single day to take advantage of drops in prices. It is worth noting, however, that day trading is an advanced strategy and should be reserved for seasoned investors. Investing in stocks for beginners should emphasize long-term growth. That means buying shares and holding on to them for years, if not decades. What do you think of our video? Let me know in the comment section below. Also, subscribe to our channel before you go. Thanks for watching.